Innovate. Enable.
Hello and welcome to NSE FinWiz Season 6, powered by CNBC TV 18. I'm George Koshi, and as always on this show, we'll help you navigate the seemingly complex world of investments and personal finance with the help of our experts. Today we come to you from Halol in Gujarat, from the manufacturing unit of one of the leading tyre manufacturers in India, CEAT Tyres.
Established in 1958 with the motto of making mobility safer and smarter, today CEAT is one of India's leading tyre manufacturers. CEAT produces over 15 million tyres a year and offers the widest range of tyres, catering to heavy-duty trucks and buses, light commercial vehicles, earth movers, forklifters, tractors, trailers, cars, motorcycles and scooters, as well as auto rickshaws. Building best-in-class products through a culture of continuous innovation, CEAT marks the highest exports from India in truck, OTR and LCV categories to over 130 countries. The flagship company of the 22,000 crore rupee RPG enterprise today has a strong presence in global markets. This week, NSE FinWiz is at the factory of CEAT in Halol, Gujarat, to engage with young minds assembled there on the theme, Invest in Yourself, Your Path to Prosperity.
This is an excellent initiative because if you look at our employee, the average age of the employees is something around 24-25 and most of them are very young. So they need to learn how to manage, and otherwise they will either get into the hands of some agents or it's better that if they know what they are what they are investing, why they are investing, where they are investing, and what is going to be their returns. And it's an excellent initiative by CNBC to bring this to our team in CEAT.
So I would like to ask the experts regarding being a millennial or like youngster, and in the beginning of my career, how can I plan my savings and spendings? What ratio should I follow? That will be great for me.
Welcome to NSE FinWiz Season 6, powered by CNBC TV 18. The theme for this season is Invest in Yourself, Your Path to Prosperity. We bring the show to you from Halol in Gujarat, from the manufacturing facility of CEAT Tyres. We're joined by the employees of CEAT Tyres here, with whom we'll be discussing ways and plans of managing their wealth as well as their investments. Helping us in this conversation will be Mr. Kalpesh Asher as well as Harshvardhan Roongta, two financial experts in this space. Just to begin with, and with all these young employees right in front of us, the first question really to you gentlemen is a young age really an advantage when you come to investing in personal finance?
When you say young age, you all are worried about your career and how it will shape up, and obviously what you earn, because these might be your first and second years of your career. You are always looking at saving. Now, when we look at the word saving, there's nothing wrong in it. It's a very good way of starting off. But I would like to keep a differentiation here, that when you say saving, it's an emotion. You feel good about it. But when you say you are investing, you are doing an action. And you are taking the action to a proper purpose, which will take your wealth ahead in time. With simple savings, you will not be able to create wealth. So try to understand the basic difference between saving. So first you need to save, because only if you save will you be able to invest purposefully.
Well, the average age here I see is about 25 years. Now, if somebody of that age were to put 1,000 rupees now, and probably vis-a-vis somebody else on this side that I see at the age of 35 to 40, what really is the difference that you can actually outline?
So that's actually a very interesting conversation that we can have to begin with. So many of the young people that we see over here, and we interact even otherwise, who are in their first job, just about to receive the salary, or have received it about 2 or 3 months from now. The perception is And if I am talking to an audience like this and saying that you think about retirement, half of them must be thinking that I've really lost it. I mean, I've just joined job. I haven't got my salary. I've just about got my salary. I'm still on probation in that sense. And this gentleman is talking about retirement. Okay. So there could be a disconnect. But you must really, at least listen to this. If possible, implement it. Why? Because using this example of 1,000 rupees, I believe everybody sitting here can definitely invest 1,000 rupees. I mean, there is no doubt on that. You could be in your first job, you're in your probation, whatever you are in. You could save 1,000 rupees a month. Now see the magic that this 1,000 rupees can do for a youngster. So we have two sides. We're looking at this side, with about an average age of 25 years. And here, say about 30, 35 years average age. So if you were to invest 1,000 rupees a month, okay, over a period of 30 years, and if it grows at a compounded annual rate of 14%, this 1,000 rupees invested every month becomes 54 lakhs at the end of 30 years. Okay? So, some of you started off. Let's assume that some of you have heard this and you say, okay, let me just start off investing. And some of you say that I don't want to invest now. I mean, I will start investing, but probably 5 years hence. I will not do it now. No, this is a time for me to enjoy myself. I've just got my money. I want to buy, smarter phones. I want to buy motorcycles. I want to do whatever for myself. I will invest this for 1,000 rupees, but 5 years later. So if the same person was to invest the same amount of money, which is 1,000 rupees per month, for a period of now 25 years, not 30, but 25 years, because he's not started 5 years ago. The same amount of money invested for 5 years lesser will certainly give you an amount which is less than 54 lakhs at the end of 30 years. Naturally, right? Because you invested 5 years less. Do you know how much this amount becomes? The end result for having invested for 25 years instead of 30 reduces your end corpus by more than half. So if you were getting 54 lakhs in the first instance, if you invested for 25 years, the end corpus becomes 26.5 lakhs. So a delay of 5 years reduces your end corpus by half.
On that note, we'll take a quick break. On the other side, we'll be discussing the different digital tools available for investors. Stay tuned and keep watching. Welcome back. You're watching NSE FinWiz Season 6, powered by CNBC TV 18. We're discussing financial planning here with the employees at the CEAT factory in Halol in Gujarat. Well, in this segment, we'll primarily like to discuss investing in the digital age and how it really works.
It's really a blessing which was not available to individuals as much as 10, 15, 20 years back, So that information now is available. Everybody just on the click of a button can access what's going on if you have the inclination. If you're not inclined financially to find out, then nothing is going to come to you. You have to step into it to find out what's going on. What do I need? Here, the point is the pros and the cons. What you need to understand. That the pros are that everything today is available. So even if in financial planning, if we talk, we have, when we talk of the model of a cash flow, we have insurance, we have investments, we have taxation. Today, we have apps for that. Okay, so we have apps which monitor your income and expenses. We have apps which let you invest in mutual funds, stocks. So everything is done on a smartphone or on a desktop, and you don't need to travel anywhere. Your KYCs are done, which is a compliance part of it. Then you have even the taxation. Everything is now online. So all this is a blessing. The part which we need to be careful in this digital age is that how do we not get overloaded and confused with it? And we select the thing which is only useful for us.
But then the digital age has also opened up the avenues in case of just providing you more investment avenues, really, right? I mean, how does that really come into the picture? Because earlier, the generation would have probably 3 or 4 places to invest in. Now you've got many, many more.
Yeah, so actually, there are merits and demerits of everything that happens with you. Okay, so there is a digital boom wherein there are more avenues opened up. So which is a good thing. I mean, obviously it is nice. I mean, why wouldn't you want more options to invest into? Much more sophistication has come into products or offerings that are available right now. See, what is important is what should I take and what should I not take? As there's a prayer saying that allow me to do the right things and not the wrong things and give me the sense to differentiate between the two. Right? That's the prayer. So the question is, what is right and what is wrong? What should I take? What should I not take? Is the biggest question. For which, if you do a little introspection into yourself, into analyzing what do you need, the moment you do a little introspection, talk to yourself before you get into the information. See, the problem is we're looking at information and evaluating, whether it is good for me or no. What you need to do is find out internally what do you need and then go searching for the relevant information. That's the right approach. What all do I want? So make a wish list. I want, my money to be parked in such a way that it grows more than inflation. I want money readily available to me after 3 months. So which are the products that help me with liquidity? So I need X amount of money for my children's education after 15 years. How do I go about investing for 15 years? So these are the questions that first you ask your own self. Once you have the questions ready, then you go out searching for answers. You'll be able to come more closer to the relevant portion of information that is available.
You mentioned the human element here. Now, where does that really come in? Because you have so much of information, you have all the apps. Most of the banks are talking about AI, technology, all of that taking over a lot of investment decisions. Where does the human element, especially for a fresh investor, come in? And where do they actually draw the line?
So this is where, the role of a financial planner comes in. Now, when you say a financial planner, you have to understand what does a financial planner bring to the table. And he exactly gathers all the data which you have, your financial data, and then puts his perspective into how will he help you achieve those goals. What is right for you? What is wrong for you? He gives you a rationale for it. He tells you the do's and don'ts. He is like your family doctor. He knows your pulse. So he will be always telling you what is right for you and what is wrong for you. So in case if the whole world is moving with hypothetically equity, that equity is the best thing. But if today the phase of life in which you are under a solid debt, then you are not concerned with what equity markets are doing. Your first job is to repay the debt. And you need that neutral voice, that unbiased voice to tell you that for you, the focus is right now to save money, put it in FDs, repay your debt on a regular basis and come out of the mess you created for yourself. That a financial planner, the human element, gets into your life. You will find no app telling you that. So once you are focused with your goals, you have achieved the purpose with the help of a planner, then these apps will do the job for you much quicker.
Well, on that question, we'll take a quick break. On the other side, we'll take a few more questions from the employees here at CEAT Tires. Stay tuned. Welcome back to NSE FinWiz Season 6, powered by CNBC TV 18. In this segment, we'll be taking questions now from the employees here at CEAT Tires.
So my question is mainly about, with the amount of, again, similar to what I had asked earlier, with the amount of information that is available and so how do you identify what is a good opportunity and how can you, in order to mitigate the risks of the scams which are happening? So how do you do that?
See, most important is first to get on board. Okay, because if you're not on board and want to be a bystander, then you will not understand what is happening. Okay, so most important is identification of goals. Now, for example, if I tell you that today, if you have identified a goal which is very short-term in nature, you should not be taking any risks. Now, whatever scams are happening or in whichever capital markets are happening, they happen in fixed income, they happen in equities, they happen in real estate. Everywhere, these type of, wrong elements are present. But if your goal is clear to you, that I want to invest for this particular period in a particular product, which is regulated, and you have put in the amount which is taking care of your present lifestyle, which is not hampering your present lifestyle, which means that even if, God forbid, there is a scam or there is something which is not in your control, your actual life and your real job are not affected by it. Now, how would you know that? By two things. As I told you, identification of goals and understanding your cash flow. What people, they falter is that they put in everything in a, in a very ecstatic frame of mind looking at what markets are happening. So if there's a bullish phase going on in equity markets, everybody rushes towards equity markets at that point of time, not understanding that there could be something brewing wrong below it also. And when you put everything into one asset class, and if there's a miss happening there or an accident there, you tend to really get affected a lot. It affects all your investments, your lifestyle, and everything. That is where even asset allocation comes into place. Do not put all your eggs in one basket. We've heard that 1,000 times. That divide your investments. So all your investments are not in one product. And all scams don't erupt on a uniform level. And lastly, be financially savvy. Just don't leave it to external conditions. Oh, a scam happened. I don't know what happened. Keep your eyes open. Take the help of some professional and move ahead.
Basically, what are the critical parameters or tools we need to monitor? Because we assume mutual fund is managed professionally by some set of professionals. But as layman, how I will understand my investment is growing correctly or not?
Yeah, so it's a very interesting question, and I'm glad you asked such a question, because right now we just spoke about keeping your eyes open, keeping your ears open, keeping some bit of information available. So the question is, to start with, simple things. There are 40 fund houses in the country right now. Why don't you just restrict yourself to investing into the top 10 fund houses? I mean, this filters out many things automatically, saying that the top 10 largest fund houses are already, why there is a reason why they're the top 10, right? So that filters out many other problems for you. Then comes to the processes involved by fund houses, which a lay investor may not have access to, may not be wanting to get into details. Simple things that you could do is, what is a track record of a fund house and the schemes that they run? How long have the schemes been in operation? So there are schemes which have even completed 25 years in existence right now. So if a scheme has been in existence for 10 years or 15 years or 20 years, and they have a track record, because they've been in existence, they have a track record, you can simply go on and check what they done in different time phases. So you have tools right now available wherein you can simply do a calculation to say that what was the return this particular scheme gave over a period of these 10 years. So you can take a 2004 to 2014 and say what was the return that this particular scheme gave between that period. Now, if you have a concern from a period, say 2007 and 8 to 2018, because 8 the markets had fallen quite a bit, you put in those dates and evaluate the scheme, what the scheme has done from that period to this period. So these are very simple things you can do as a lay investor. Once you've done basic research yourself, then you can top it up with an expert advice.
How the fund managers are controlling the market at present?
So quite honestly, I don't think any fund manager believes that he's controlling the market. And because, market really cannot be controlled by any, set of individuals for that matter. So, what the attempt of a fund manager is to just try and identify the right ideas within the objective of the scheme. So if a scheme is a large cap fund, the idea is to buy the best large cap companies as per the research of the fund house and that of the fund manager. So in real sense, they wouldn't be controlling the market, but they would be definitely trying to get the best out of the movement in the market. So, as an investor, when you invest your money into a mutual fund, you would definitely want to see who's the fund manager, what do they do, what has been their past record. So I think as far as that is concerned, as a lay investor, you should be fine.
Thank you very much on that note, gentlemen, and also to a fabulously engaging audience here at CEAT Factory in Halol. Thank you very much for watching. You're watching NSE FinWiz Season 6, powered by CNBC TV 18.
What I think is that the content of the event was very good. It actually proactively gives us the idea how we should plan our finances. And secondly, it is very good for us and our population at CEAT because most of the people who are working here are from science background and from engineering side. So they don't have much exposure towards the finance part. So this is definitely, this can give a path or just an inception of an idea how to invest.
It was nicely organized. We have a varied group right from freshers to experience of 15-20 years. The important thing which I liked out of this event is you have covered entire range, right? New joinees, what is importance of investment, how they will look investment 5 years, 10 years, 20 years up to retirement age. Then you also covered mutual fund, digital tools, how we should analyze, how we should invest, how it has to be changed dynamically. So overall, lots of insight has given with respect to financial matters.
Focus, ideate, innovate, enable.